Welcome to Bullion Bulletin this lovely Singapore morning, this second Asia Pacific Precious Metals Conference. With me, Mr. Alistair Hewitt, the Director Market Intelligence, World Gold Council, London. So my first question, how about the global risk that you are witnessing that can impact the global financial market and obviously directly or indirectly impact the global gold market?
Yeah, so clearly a lot of investors look at the global markets and try to assess the degree of risk that they're faced with, and there's no doubt in 2018 there are plenty of risk on the horizon. Lots of investors are worried about equity valuations being stretched. Lots of investors are worried about the amount of risk that people are taking in financial markets, and people concerned about that want to balance their portfolio and have an allocation to gold. So there's no doubt that the risk environment is encouraging a lot of people to look at gold. But when we think about the bigger picture, risk is just one factor that would drive someone to invest in gold. The other factor is the long-term returns. If you look at gold since the mid-1970s, it's delivered about 10% per annum, and that's driven by rising wealth. People become richer, people have more money to spend, and they go out and they buy more in the way of gold jewellery, gold bars and coins, gold and electronic goods. So whilst risk is important, the long-term returns that gold offers is also a big factor for investors.
So you have recently presented a 30 years outlook of gold market, and you have put a lot of importance in the China, India, and enter this region. So what is I would like to know a little bit about that. That what is your expectation that 30 years down the line, where do you want to see China, India in this in respect of the gold market?
So when you're looking 30 years down the line, I think you can only say two things with certainty. It's going to be different and it's going to be surprising. But that probably won't be of much value to the industry. So we try to have a look at what are the big structural factors affecting the global economy, affecting the gold industry, and try to extrapolate from there what's going to be important. And I think there's no doubt that China and India, whilst important in the gold market today, will continue to be important. They've got a huge cultural affinity with gold, and over the next 30 years, we're going to see income levels rising in those countries. I mean, if we think about India, it's going to benefit from arguably the largest demographic dividend the world has ever seen. You've got so many youngsters coming through, entering the workforce. The middle class is going to swell. And I think that's going to be hugely important for the global gold market over the next 30 years.
So you are not expecting that this gold buying habit with the new generation is coming, both in India and China, especially India. So they will be equally attracted to invest in gold.
There is no doubt that different generations have different attitudes. If you have a look at the attitudes of the baby boomers in the 60s, they'll be very, very different from the millennials that we've seen more recently. If you're a consumer-facing business, you need to be alert to those changing habits amongst your consumers. You need to understand how their attitudes are different. And there's no doubt that the younger generation will have subtly different tastes compared to their forefathers when it comes to gold. So the consumer-facing industries need to ensure they understand how consumers are changing and adapt their products and their marketing strategies. But deep down, gold's been around for thousands and thousands and thousands of years, and it's been embedded within society for all of that time. So deep down, there will remain a strong cultural connection with gold, but it will change, and consumer-facing businesses need to adapt.
So some central banks, I was seeing some central banks are aggressively buying gold. So how do you look at it? For example, Russia, every month they are buying. Then China is anyway, they are buying. So some countries, I think Iran has also started buying. So these countries, the new countries, they have started buying more gold. So what is this indication? They are believing more on this asset, or it is a strategic, portfolio diversification for the central bank, anticipating some future risk. What is your understanding of this?
So to the list of central banks you mentioned, you can add Kazakhstan and you can add Turkey. So those are the two countries that are alongside Russia have been particularly active in terms of buying gold. And one of the reasons why central banks want to own gold is it's a fantastic hedge against the US dollar, number one. And secondly, it isn't anyone else's liability. So if I own currencies denominated, or other people's debt denominated in different currencies, I'm exposed to that country paying me back at some point. With gold, I don't have that exposure. I've got my vault full of gold, underneath my central bank, and that's quite a comfortable position to be in, quite a nice position to be in. So those are two factors that are driving a lot of central banks to increase their gold reserves. And listen, if we look at central banks as a whole, they're significant holders of gold.
My last question, what is your assumption of this ASEAN region? What is your expectation? Because economy is growing and naturally these guys, for example, Malaysia, Thailand, and this Singapore is also now has started buying more gold. Vietnam is another country, though it is restricted, but still I feel that Vietnam is coming within few years. Myanmar is liberalized. So as a region, what is your expectation how the market can be developed?
Hugely exciting, and events like this I think are fantastic for the long-term development of the regional gold market. I've had a number of conversations from people from different countries, and there's genuine excitement and enthusiasm about how these markets can grow. And we've seen some positive growth so far this year. If you look at Q1, bar and coin demand in Vietnam and Thailand are up 4 and 5% respectively. Thailand's experienced its strongest economic growth since 2012,
right.
Really strong exports.
5%.
Exactly. Vietnam grew at 7.4%. Consumer confidence is at a 3-year high. So I feel like there's momentum building. And if you look back at the kind of the cultural significance of gold for many of these regions, it's really strong, it's really embedded. So I think the foundations for this part of the market to grow are good. But there are clearly challenges, one of them being the changing shape of the consumer, which we discussed earlier on.
Thank you, sir.